Is the daily report, particularly we're getting into the marketplace where we really equip you with matters financial knowledge, and we make sure that we have experts right here so that you can really understand how do you plan your money, how do you increase the money that you have in your wallet to even double up. And the conversation tonight really touches on all that. For probably you or someone you know has quite the amount of debt. It could actually be probably as little as 100 Kenyan shillings all the way to millions of Kenyan shillings. And you're asking yourself that one main question: how do I get out of this debt? Well, that is a conversation we're having with you, so that, because these conversations are really about you, and you can always chime in on that. 0793 267 279 is our WhatsApp number. 0795 045 864 is the number to call in live. And Kathleen Mureithi here is going to be very happy to answer your questions. She is the head of training at Centonomy Ltd. Karibu sana.
Thank you very much for having me.
First off, tell us about, even from Centonomy, where you sit, and even as an expert on matters of financial literacy, where would you rate Kenya's debt uptake?
That's a very interesting question, because I was actually reading about it last week. So there's a FinAccess household survey report that actually shows there's an uptick of Kenyans defaulting on loans. So if you look at the percentage this year, we are aiming at around 17%, and this is an uptick from 2021, which was 11%, meaning so many Kenyans are actually defaulting. So it gives you a clear picture of the financial situation on the ground. Again, there's also the Financial Inclusion Fund, which people call the Hustler Fund.
Yes.
You know? So the reports are almost 50%, so 30 to 50% Kenyans are actually interacting with it. So lending, borrowing is something that's not new to Kenyans per se, so we are interacting in that ecosystem. But the thing is, there are people who are getting it right, and there are others who are, you know, swimming with the sharks and not getting out alive. Yeah,
right.
Yeah.
And whichever the brackets that all these people lie, when you talk about defaulting, and we've really even heard from the president himself talk about, even for this Hustler Fund, that you really need to repay this, you know, particular loans. The head of state and the government really begging, and this goes to even other private mobile loans, even the banks themselves. From where you sit, is it always a matter of, I have this money, but I don't really want to pay you? Or is it the fact that I don't have the money right now, so give me some time?
So it could go either way. You know, if you look at all ends of the spectrum, there's also the mindset factor on one end. I have the money, I'm not paying you, you know, even Kenya has debt, that's what we say, you know. So who am I to pay you? But then we do not look at the repercussions or the consequences of this, because now you're building bad credit, you know, habit or credit score. So when the need arises where you really need to get credit for a particular need, then now you have already put yourself at a disadvantage. On the other end, with the economy as is, I mean, we look at the reports from Capital Markets Authority, we also look at how the business landscape is. The economy isn't looking so good. So now there's also that bit, where is the money to pay? You know, I really need the money, but I'm trying to get the money, and there's no money, there's no circulation. So we are all trying to balance both ends of the spectrum, but ideally the situation is you'll find the mindset will supersede this other side.
All right. Let's take a look at a particular report by TransUnion Kenya, Q1 Market Analytics report, which they released last year in October, taking a look at the first quarter of 2024, and goes to show how the uptick of this particular load. So first off, it talks about 52.79% of Kenya's total credit in this first year was issued through mobile loans. This basically really surpassing the traditional loans from brick and mortar facilities. It also talks about 3.92 million new mobile loans accounts were opened. Also talks about millennials, this is between 25 to 35, making a huge share of the principal amounts in various, loan categories, accounting for about 51.1% of this particular mobile loans. What do you make of this report?
I mean, it's not new. I feel like it was bound to come out in the public, ideally also because if you gauge the pros and cons of mobile loans, right now it's very easy for you to get a loan from a mobile, application, unlike the traditional way, as you call it, where now we have to operate within business hours. The banks, you have to go to the bank, there's some documents you have to sign, there's a lot of back and forth, but now with the mobile loans, I just need to, download an application, fill out my KYCs, and then get my loan almost immediately in my M-Pesa. So it's the situation the way it is, it's very easy for you to access credit, and like before, so now we are seeing so many people getting into that space where even when they don't need the money, just because they can easily access it, so they are getting into those mobile applications. Again, there's also the bit of financial indiscipline. We really have to be honest. You walk through CBD, you see a good pair of shoes, you have so many shoes, in the house, but because you love this particular one and you don't really need it, so you end up spending money that probably didn't have at the moment. So you quickly go into the mobile application, get out credit, buy the shoe, which you might not wear it, So again, there's also that ripple effect. And again, with the age bracket, the millennials, if we look at the money in the different seasons of life, in your 20s, before you get to your 30s, you're in the season of exploration. This is where you're trying out almost everything, And right now with the Gen Zs, we are free-spirited, I see, I like, I want, There's also the bit of quality over quantities. Now we're seeing so many people traveling. Going to Dubai does not look that hard as, 10 years ago, Things have been made easier for us to experience these thrills or luxuries in life. So people are getting into credit to also experience the exploration period. And then when you get to your 30s, this is when now you're getting into the establishment phase, You're probably getting married at this point, you're starting having kids. So now even your goals have begun to change. Now you're thinking about home ownership, you're thinking about school fees, you're thinking about food expenses have increased, and you're probably earning the same amount of money you're earning 5 years back, and you haven't really gone into the spectrum of should I increase my income. So now things are happening at a very fast rate. So now you get into spending, and it goes on even in your 40s, where now you're trying to consolidate the little assets that you've been able to accumulate. And you'll find now with the fear, I'm getting into the retirement age, I have not been able to do A, B, C, and D, but I can access a few coins here. So you go and access it just because you want to accomplish something, but you do not think about the repercussions or the consequences of this. And again, it goes back to the mindset, I see, I want, I get, but you don't look at the underlying factors.
Right. Let's throw this question now to the Kenyans, and we sampled a few of their comments on how they really get out of debt. Let's hear what some Kenyans say before we continue, so that we can actually understand the whole psychology. In case you're watching us tonight and you've just opened any mobile loan, before you actually even scan through this particular mobile loan, what do you need to understand? Let's listen to Kenyans, and then you answer your questions on that.
Mambo ya madeni ni kama na chada na pete hapa nchini Kenya. Wakenya na madeni ni kama bibi na bwana, hatuwezi weza kuachana, moso wakati huu ambapo ekonomia ya Kenya imezoroteka sana. The reason we having these debts sio ya kwamba tunazitaka, lakini ni mtu akienda kuchukua deni unapata hasa amefika mwisho.
Ni kustrategize na kuprioritize ile loan ambayo utatangulia. Kwa sababu na you cut off the high interest loans, hiyo ndio kwanza unafaa kupunguza. Mobile loans, what are they helping? They are not helping. Hauwezi anzisha biashara na mobile loan aje. It is giving you 500 bob, 300 bob, 1000 ukipatiwa mingi. Who will be helped by such amount in Kenya right now? Hakuna mtu yoyote anaweza saidika na pesa kama hiyo. Pesa ukichukua ni kukula tu.
Financial literacy hasa kutoka kwa serikali inaweza kuwa haitakuwa na impact sana, kwa kuwa ambao wanafaa kutusomesha already wao wako na madeni. Kenya nchi iko na deni ya trilioni 10. Sasa mimi niko na deni ya 5,000 ya simu. Utakuja kuniambia nini na hujaweza kulipa deni yako?
All right, Kathleen, the country has billions of trillions of loan. Mbona mnasumbui? But anyway, what I can get from the two gentlemen is matters how you strategize and prioritize, and they talk about matters impact. a quick look at and review of what they're talking about. Just to quote one of them, says, huwezi anzisha biashara na mobile loan. This goes to what you talk about, the mentality of this loan. When you're as a trainer, when you're even talking to experts themselves, people who are in this financial sector, or people who don't have any financial knowledge, what is their view, and what is Kenyans' views when you're talking to them about these loans and how much impact they can have on their lives?
I think one of the considerations that you really have to put in mind when it comes to debt is time. Time is actually the biggest consideration, and people really do not listen or read the fine print when you go to the bank. You have been told, you can be able to
the whole list of that pallet.
So you look at the amortization calculator and you see, 15,000 every month, that's little money, you sign off, but you don't read the fine prints there. And it goes to your understanding, financial literacy also. We usually say, if you want to generate wealth, you have to love two things. You have to love how to read, or to love to read, and also you need to love mathematics. The wealthy people, if they can't do either of the two, they usually get experts to do them, so that at least I can come and say, I need 10 million shillings in the next 24 hours because of A, B, C, and D, and you trust me that it's a big currency in the whole ecosystem. But now, when we boil down now to that mentality of the 500 shillings cannot start a business. Ideally, yes, it's true, because it will be very detrimental of you to get a mobile loan to start a business if you do not have a clear-cut business plan in mind, So you're operating from a point of speculative assumption, So someone has done this business before, I see it working, I'm going to also take out a loan, start this business because person X is achieving X, Y, Z, and then now you do not get the expected return on investment. But here you have a loan and you do not have a clear repayment plan. You quickly signed off yourself, and now you have to pay this loan. So we really need to understand what are the fine prints. And we usually say, ask all the questions. Do not ask the questions in your head and answer them by yourself. Ask them in as much as they might sound stupid to you, but ask them, this is a long-term loan. I'm supposed to pay it in about 5 years, right? So, of course, the interests are going to be high because of the accumulation of it, So do not look at the monthly payment only. Because it's a long-term loan, you're probably going to pay very little, but the interest is high, But the smart people will come and realize, all right, so if I can get a short-term loan, probably a year, 7 months, and then now pay extra every month, then now I can be able to utilize that money and then avoid the interest rates that come with the other years, So you need to understand the dynamics and how they play out. But if you can't, the financial institutions and the lenders, but I would suggest there's some unregulated lenders in the market, if we are going to be honest,
And it's something that one of the gentlemen was talking about, the high interest loans. And so hypothetically, if you have, let's call it lender A, have lender A, B, and C. A would probably charge an average of, let's say, about 11. Is 11 okay?
Per month?
Yes. So let's scale it, because you talk about, let's say, 4 years, let's scale it down to about, let's say, a month or two. And you have about, let's say, A having 11%, and B probably 9%, and C maybe 16%. I'm putting these figures out here because for most of this, lenders, they have a way of even how they advertise to you. They'll have it in a very funky way, a very nice creative way to tell you you need to be on board with us right now.
Yes.
But then what should be going through, let's say this is Brayo who is doing it tonight, and has downloaded the 3 of this lending apps, and he's looking at this percentages. He doesn't really, as you're saying, ask people the questions, not answer themselves to you.
Yes.
So what should be going through Brand's mind when he's seeing some of these percentages as well as all these figures, and he's supposed to take this loan just for a month and repay it exactly 1 month later?
All right.
And probably just to add on it, maybe he is, he's employed and he has a salary of about, let's say, 20,000 Kenya shillings.
Oh, wow.
And he's taking a loan of, let's say, 5,000 Kenya shillings.
Okay. All right. So maybe to put it out there for Brayo, 11% is actually too little for these kinds of predatory, predatory mobile lending or lenders, you know. So they usually average about 30% a month, and the annual percentage rate could actually even go beyond 300%. So that's why we call them predatory, because they take advantage of Brayo's financial illiteracy, Brayo's inability to understand how the loan dynamics usually work, Brayo's need for quick money. You know, I want money to do A, B, C, and D, probably even for consumption, you know, for basic expenses in the house. So what Brayo needs to understand is, number one, what type of loan am I getting? This 5,000, what is it for? You know, if it's for consumption, then that's definitely a bad loan. A bad loan. A good loan is a loan that you take to purchase an asset that will put money into your pocket. So a bad loan is something that is a loan that you take for consumption. So automatically at this point, Brayo is living beyond his means. If the 5,000 is for the basic expenses. Number two is the total repayment amount. So if we are doing 11%, Brayo can be able to calculate and see, all right, so what's the total repayment amount based on the time that the application has, you know, they give you a lot of details so that you can make the choice yourself, and you don't come and say, oh, but you told me, no, all the information was there and you made that sound decision. So based on the number of repayment months or repayment period, Brayo needs to understand what is the total repayment amount that I need to, you know, chuck out of my pocket because of this 5,000 shillings. And then number two, where am I getting this loan? What is the reputation of this platform or this organization where I'm getting this loan? You know, there's no legal recourse in case of any breach of agreement, you know, and at this point, these people have a lot of your information. There's also the bit of breach of data, you know, so they have access to your contacts, you know, they have access to your private information. So if Brayo is not able to pay this amount of money, depending on the agreement that Brayo has been able to sign, you know, so now there's the threats. We've seen cases of people being threatened. We've seen cases of people's privacy being infringed. You know, you get a call, person X, for example, Brayo's friend from 10 years ago gets a call, you know, Brayo hasn't paid 5,000 shillings, and now you're wondering, who is this Brayo to begin with, you know? At this point, I don't know Brayo, you know, and then now there's the bit of data, verbal abuse, emotional abuse. So Brayo might actually get into depression or anxiety because of 5,000 shillings. So what Brayo needs to do is, over and above understanding the whole ecosystem, is to try and see, what can I do right now before I get to a point where I need to borrow the 5,000 shillings. So Brayo has a salary of 20,000 shillings. So he needs to do a financial health check, you know, understand what are my liabilities, what are my assets, what do I owe, what do I own, you know, and don't do it with your mind. Like, take a piece of paper and a pen, write it down, you know, everything. So you know, all right, so my debts accumulate to X amount of money, my assets accumulate to Y amount of money. If you understand that now, Brayo will be able to know how much of what I work so hard for is actually mine. You know, because ideally the 20,000 will come, but there's a landlord, you know, there's the utilities that Brayo needs to take care of. There's the girlfriend somewhere waiting for allowance or something, you know. There's usually someone who has a job description for your money. Brayo is no, you know, exception to this. So once Brayo is able to understand how much of this 20,000 is actually mine. If he does that exercise, he might realize, oh, out of 20,000, only probably 2,000 is actually mine. So what he needs to do with this 2,000 is be selfish with it.
All right.
So pay himself with that 2,000. So if Brayo is able to put aside that 2,000 every month, every other month, it will get to a point where he will have an accumulated amount of money. Even the 5,000 will not be lucrative now from the mobile lenders.
All right. But Kathleen, as generally as Gen Z like to say, makosi ifanyike. And Brian hops into one of these lenders, either ABC, mostly in you're 30%. And whatever he has to pay, because if he was borrowing 5,000, whatever he has to pay might be, I think, probably about 6,500 thereabouts.
Yeah.
Yes. So tonight he's hearing this information for the first time, this whole financial knowledge. And whatever thought in his mind was, I'll have to look for lender C to pay up whatever lender B is owing me. The whole theory of, you know, borrowing Paul to pay Peter. Yes. How does Brian go about that?
Well, at that point, kama uko ndani ya shimo, the worst thing you can do is to accumulate another debt. That's not good advice at this point. You're already in a disadvantaged situation, you know. So the first thing that you need to do is assess your debt situation, you know. So analyze that debt that you have. Again, the total amount of repayment amount that I need to check at the end of the day, the type of loan, understand the particularities of that loan. Once Barry is able to understand that, now there's that thing where the budget that I'm working with, or the budget that Brayo is working with, can I spare a few coins from this budget to realize that probably Brayo is spending a lot of money on non-essentials. They're important, yes, but they're not essentials. A good case in point is probably Brayo is paying a monthly subscription to a gym somewhere, you know, and then he can do home workouts, you know, or Brayo's girlfriend, instead of going to the salon every month, there's, you know, like you can work smartly around it and then spare a few coins. So now these coins now can be used to pay off that loan. And then now you use, Brayo can use a snowball effect where now you pay off the small loans, for example. So if he has a loan of like 2,000, pay that off quickly. If he has another one of 4,000, pay off that quickly. And then now baki na ile kubwa. So the bigger one now with them, because he would have built that habit, you know. So with that amount of money, you can be able now to clear off the big loan. And there's something I want to emphasize when it comes to debt, you know. If you find yourself in a habit where you are borrowing to cover basic expenses, it actually sends two signals. Number one, you're living beyond your means, so you might actually have to do a lot of recalculations. And number two, you're spending your tomorrow today.
All right.
So now what happens when tomorrow comes? So if that doesn't put you in a situation where you do a lot of introspection, then I don't know who's going to help you, because at this point you have all the help, but you're saying, nah, I'm good, you know?
Right.
So Brayo needs to do all things so that all ends of the spectrum balance in the end.
All right. There are quite a number of questions coming in, particularly from business, you know, people. I really wanting to know how productive debts can really be, and even taking loans. But before I get into the SMSs and the WhatsApp, remember the WhatsApp number 0793 267 279. Rusha hizo maswali zote, and also call in live. Kathleen will be able to answer you. Kathleen, right now, for most of the Gen Z as well as the millennials are in what we call the gig economy.
Yes.
I didn't have any money today. I know I have a debt of probably 10,000, 15,000, 20,000 upwards. And I get a text, I'm told, because I'm a DJ, I'm told for the next, there'll be a concert, and for the next 3 weekends, I know I have quite this amount of money. For such kind of, you know, people who depend on this, you know, the ones of, you know, kind of money that, you know, it will come in quite the load, and from there until another season. How should someone handle this debt?
All right. So for this kind of person who does not have a guaranteed income at the end of the month, you know, so there's that financial insecurity bit. What you need to have is something called an emergency fund. Okay. Because there's that period where you have money, and then there's that period where you don't have money. Ideally, you have an understanding of how much your lifestyle is worth, you know. So if you're a DJ, you probably, if I give you 100K, or 200,000, you can sleep from date 1 to date 30 and you'll be good, you know, because that money has been able to cover most of your expenses now. So if you have that understanding, then you need to have at least 6 months worth of your lifestyle tucked in somewhere for that period of time where you'll not be making any money. So you really have to cultivate a lot of financial discipline, because, you know, yes, it's raining right now, but there's a season of drought that will come. So when that time comes and you have no idea how long that season would last, so it's good for you to prepare for those uncertainties. Ideally, also there's some unexpected expenses that usually come. So over and above you not having an income, there's some, like now COVID, how it happened. You know, there's a lot of people that were actually put at a disadvantage because of that eventuality. You know, there's some unexpected medical expenses. Right now, people, especially the millennials, are taking care of sick parents, or you have to send money back home, you know, to take care of your parents. You know, so because now you have an understanding of everything and the whole ecosystem, it's good for you to have an emergency fund. The wealthy people, we call it buying yourself time. We have people who have bought themselves up to 10 years. This is now what we call generational wealth. So, you know, my child's child, so I have been able to buy that time, and they can be able to live confidently. So once you operate from that abundant mentality, whatever you have right now, you will not misuse it, and if you need to make a big purchase, that's not something that you'll go and okay, so I have like 1.2 million, there's a good car over there, let me go buy that car. No, you'll actually have to rethink. Ideally also, this is not a situation where you put your money in a low, interest earning pot, So how smart people do is now the money markets, because now everyone, I believe like everyone has heard about the money market. Even if you don't understand this, the word money market that you've probably heard. So now people will start thinking like investors. So instead of you putting your money in a place where it's not gaining interest the way you would want it, so now you put it somewhere else. And the good thing about it is it also cultivates discipline, because somewhere else, if I want to buy money right now, I can actually withdraw, but in a money market, you'll probably be given a waiting period of about 48 hours. Within those 48 hours, you'll have thought clearly, do I really need that pair of shoes? No. So you'll have to do a lot of recalculation. So now this gives you a situation where there's a buffer that you have created. So in case of any eventuality, then now you're good to go. Yeah.
Right. I'll start off with the questions that we have on WhatsApp. So his name is Victor, says, good conversation, TV47. Kindly ask her, if I am paid today for my salary, do I first pay off the debt before paying other utilities?
I would advise yes. One of the good strategies for you to actually get out of debt is to ideally even automate, if you can automate. Okay. So that by the time you're looking at your amount of money in the account or wherever your money is, you have taken care of the debt. Ideally also it's good for you to, if you're taking out loan or debt, take them out during that period where you have cash flow. That period where okay, this is the week that I'm usually being paid, so that at least by that time there's cash flow, and you're able to take care of those loans. So yes, if you can, the first thing that you need to do even before paying yourself, please sort out the debts.
All right. Someone here, okay, the whole comment, I won't really read it, but then I'll paraphrase it because of the language used here. Okay. But really talks about how pushy these lending apps can really be. Do you feel like it is would be time to have sit down and have a regulation on how the conversation from the lender to someone who to the borrower as well, and how this conversation, I borrowed you money, and the conversation on how it should go after I surpassed that deadline?
Yes, discussions could be hard, but the situation on the ground is discussions have been had before. But again, because of that, these lenders do not follow the regulatory frameworks. Okay. For example, if you can go to a financial institution and take out a loan, there's a regulated framework that they need to be guided by. So even the 300% is something that they can't give you. But these ones, they take advantage because there's no legal recourse. If you go to court, it might be hard for you to actually be at an advantage because of that unregulated spectrum. So even if you have that discussion, it's actually willing lender, willing borrower. So we've agreed, I give you this amount of money, you pay by this time. And there's some, I see situations where if you're not able to pay the full amount within the stipulated period of time, then maybe you can pay the interest and then we stretch out the loan. There's usually areas, loopholes that they take advantage so that at least they can make the most out of you. So now you as the borrower, you need to understand there is no legal framework that these mobile lenders are actually conforming to. That's number one. So they have all the right or all the freedom to take advantage of you in every which way. So once you understand that, then you will never be at an advantage with these people. So if you're making that decision to take out this loan, you need to take out this loan in a way that you know this loan is very necessary. If it's an emergency, so I'm taking out this loan, but I know I'm going to repay it as fast as I can, Number two, you need to understand the type of loan that you're taking with these people. So if you're taking out probably a long-term loan, probably 2 months, 3 months. I'm calling those long terms because I see some loans go up to 15 days, 30 days. You need to understand what is the total amount of money that I need to pay, because you'll be shocked for a loan of about 15,000. I'm guessing you'll probably pay about 25,000. That's 10,000 more, and you have a very short period of time to actually pay that loan. So once you understand all these dynamics, you will make the sound decision to, okay, it's very good that you're offering me this amount of money, but it does not serve me in any way at this point. Then now you begin now to look at what are some of the other fronts that I can be able to explore to sort out this need that I have.
All right.
Yeah.
There's a question here. Hello, TV47. My name is Churchill. How do I build long-term wealth as a young person using good debt in this economy?
That's actually a good question. So there's a way you can be able to leverage on good debt to build wealth or in pursuit of wealth creation. Good debt is actually wealth that you use to purchase assets.
Okay.
So now for Churchill, what he needs to do is probably take out a debt or a loan and then purchase assets that will put money in his pocket and also help him to sort out the loan.
Right.
So a good example will be if Churchill wants to do Uber business. I'm guessing he's a young guy somewhere, you know. You can take out a loan, purchase an Uber. The Uber will bring money into your pocket and will also help you to pay that loan.
Right.
So in the long-term period, you'll be able to build wealth, you'll be able to pay out that loan, and you'll be able now to even build a very good credit history or credit score, so you can be able to take out even bigger loans.
And that was my next question, actually, your final question, before I get to your final thoughts. Your credit score, because when you take a look at some lending apps, when you try to probably register, they tell you, no, you have some bad history with, you know, lending app A or B, so I can't really give you money right now. Clear your maneno zuko, then you come back here. How do you, make sure that your credit score is, good to go, so that even for future, you can be able to have, borrow? I can finish off with your final thoughts on that as well.
All right. So here's the thing. Lenders usually talk to each other. You know, you can go to financial institution A and then you ask for a loan, you default on that, and then you think you'll go to financial institution B and then they'll give you a loan happily. No. There's usually a flow of information here.
Okay.
And there's a way, that's why we have CRBs.
Yes,
so they are able now to actually even categorize it. This is actually a high risk, so if you're giving this person a loan, no long term, only short term, because this person is likely to default, so there's that flow of communication. And then for the small loans that you take, that 500, well, please pay it, because it's actually building your credit history. So they're able to see, all right, this person actually pays their loan, how frequently do they pay, what is the amount of money that they take, so they're able to get this information and build a very good persona. So by the time you're getting to a point where you need that big loan, you have built a very nice portfolio of yourself, and you're able not to be trusted with the big loans. So the 500 that you're saying for Hustler Fund, I'm not going to pay, it's actually very detrimental in the long term. So pay it as fast as you can, you'll be trusted with even more. And here's the thing, life is very dynamic. It's a wavelength. So you might not need debt right now, but you will need at some point. And I usually say it's very, very, very impossible, next to impossible, for you to build wealth without debt at some point.
Right.
So once you understand that, then now you'll be able to know, how can I put myself at an advantage always, And if you find yourself, because life happens, if you find yourself in a place where you're not able to pay, do not go mute. Usiende chini ya maji, Just go to that place where you borrowed the loan, tell them, oh, here's my situation. Then now, can we restructure the repayment terms? They're not bad people. They're there to help you, Just go and say, this is the situation on the ground. I'm not able to pay or follow through with the payment process that we had agreed on. So now, can we restructure it? And as I finish off, let me just repeat the quote that really actually lingers in my mind most of the time is, if you find yourself that you have cultivated a habit of borrowing for basic expenses, then please know that, number one, that's a very clear signal that you're living beyond your means, and number two,
living today, tomorrow.
Yes. So when tomorrow comes, actually you don't have tomorrow. You do not have a tomorrow at this point.
Thank you very much. Kathleen Mureithi, she is the head of Training Centonomy Ltd. Ladies and gentlemen, you have sent your questions. I have forwarded them to Kathleen, but then this conversation continues on our digital platforms. How do you get out of debt? How do you even make sure that your credit score is very, very good? You have an A there. I'm used to Stanley Nyoringita. Kidogo niseme Catherine Sumale. Rhoda Nyamai has been on sign language interpretation. Thank you very much. Have yourself a wonderful Wednesday evening.